Natural gas futures are moving sideways after 3 straight losses, hovering just above the key $2.75 long-term support. The September contract briefly dipped to $2.72 early Wednesday but failed to mount a solid rebound, underscoring persistent bearish pressure fueled by cooler weather outlooks and steady high production. Forecast models shifted sharply cooler across the eastern U.S. and parts of the Southwest for August 24 to 31st. This change is set to cut late summer power demand for air conditioning, adding more weight on prices. The updated outlook undercuts earlier hopes for strong weather-driven demand, even though heat still lingers across parts of the South and West. On the supply front, U.S. dry gas production reached 108.4 billion cubic feet per day on Tuesday, up 6% from a year ago and running near record levels. Demand remains firm at 79.8 billion cubic feet per day, up 2.7% year over year, which helps absorb some of the supply but not enough to shift the balance. LNG net flows to export terminals slipped to 14.8 billion cubic feet per day, down 6% from last week, raising new questions about utilization at a time when global markets, especially Europe, are still well supplied. And yet, the EIA is once again forecasting natural gas prices above $4 this winter. If history is any guide, that prediction will likely end up in the same place as their past ones. But of course, if anyone is eager to lose money, blindly following EIA forecasts is always an option. Meanwhile, tomorrow's storage report is expected at 24 billion cubic feet, a bullish 12 billion cubic feet below the 5-year average. But if the actual number comes in closer to 36 billion cubic feet, the market could react sharply. Do you think prices will rebound, or will the $2.75 support be brutally broken? Share your prediction in the comments. From a technical perspective, with futures stuck below near-term resistance at $2.91 and technical momentum still weak, the market remains vulnerable to further downside. A sustained break below $2.75 could open the path to $2.50. Bulls would need a decisive close above $2.91 to spark short covering above $3 resistance. Until that happens, strong supply and weak cooling demand continue to weigh on the near-term outlook. Don't forget to like, drop a comment and check out the previous video to help support the channel, and see you in the next one.